Hey everyone, get ready because Cracker Barrel just dropped its latest earnings report and it's a total roller coaster. We're talking about a company that's usually a picture of American tradition, but right now, they're navigating some serious ups and downs. Their sales are looking pretty good in some areas, but their profits? Not so much. And let's not forget that massive U-turn they just made on their new look. This is big and it's got everyone talking. Let's jump right in and break down exactly what happened and what it means for this beloved brand and, potentially, your investments. First up, the numbers from their fourth quarter of fiscal year 2025. Cracker Barrel pulled in about $868 million in total revenue. Now, at first glance, that looks like a small dip from last year. But hold on, when you adjust for an extra week they had in the previous fiscal year, the revenue actually increased by about 4%. That's a solid bump. And here's where things get really interesting. Their restaurants are still cooking. Comparable restaurant sales shot up a healthy 5% over last year. This marks their fifth quarter in a row of positive restaurant sales growth, which is fantastic news for the food side of the business. People are still craving those home-style meals. However, the retail side of the store, where they sell all those charming country-themed items, saw a slight decline of about 1% in comparable sales. Now for the profit picture, it's a bit of a mixed bag. Their adjusted earnings per share came in at 74 cents, which actually missed what analysts were expecting, which was around 80 cents per share. Overall, the company reported a net income of about $7 million. But here's a bright spot. Adjusted EBITDA, a key measure of profitability, increased by 8% when you factor out that extra week from the last year. It hit about $56 million. This boost was thanks to some smart pricing strategies and better productivity from their team members, so they're making money more efficiently in some ways. Now, let's talk about the elephant in the room, the logo and remodel controversy that had everyone buzzing. Cracker Barrel recently tried to introduce a new, more modern logo and planned some store renovations to go with it. But guess what? Their loyal customers were not happy about it. Social media absolutely blew up with complaints, and even a former U.S. president weighed in, urging them to go back to their roots. The backlash was so intense, the company quickly reversed course. They completely scrapped the new logo and hit pause on all those planned modern store remodels. The CEO herself admitted they completely underestimated how deeply people connect with the classic old-timer logo and the traditional feel of the stores. That strong emotional connection to tradition and nostalgia is a huge part of Cracker Barrel's brand. Unfortunately, this whole situation had a real impact. Customer visits dropped by about 8% after the new logo was first rolled out in August. Before that, traffic was only down by about 1%. The good news? They're listening. The few stores that got the modern treatment are now being converted back to the traditional old-timer signage and classic interiors. So, what's next for Cracker Barrel? Let's look at their outlook for fiscal year 2026. They're expecting total revenue to land somewhere between about $3.35 billion and $3.45 billion. This forecast is actually a bit lower than what many analysts were anticipating, which signals some caution. They also anticipate that customer visits for the full year will decline by 4 to 7%. However, they're optimistic they'll see an improvement in traffic trends each quarter, especially in the second half of the year. Their projection for adjusted EBITDA is between $150 million and $190 million. This is a significant drop from the about $224 million they reported for the last fiscal year. The company is also bracing for some cost pressures. They expect the cost of ingredients, or commodity prices, to go up about 3 to 4%, and hourly wages are also projected to rise by about 3 to 4%. In terms of new locations, they plan to open just 2 new Cracker Barrel stores, but they're closing 14 Maple Street biscuit units. This shows a focus on streamlining their operations. And here's a big one. For capital spending, they're planning to invest about $135 million to $150 million. A large portion of this, about 60%, will go for essential maintenance like paint, parking lots, lighting, and restrooms. Crucially, they've confirmed no spending on new remodels. This reinforces their commitment to stepping back from the controversial modern redesigns. So, how's management responding to all this? They are definitely listening to their customers. In fact, they're launching a new front porch feedback initiative. This will let their loyalty members comment directly to the team after every visit, giving them real-time insights into what guests love and what they don't. They're putting a huge focus on improving food quality and consistency in the kitchen. They're tweaking recipes for signature items like biscuits, meatloaf, and green beans, and even bringing back popular favorites like Uncle Herschel's breakfast and campfire meals. Their loyalty program, Cracker Barrel Rewards, is absolutely booming. It now has over 9 million members, adding 3 million new members in the past year alone. In just the last few weeks of this quarter, they added 400,000 members, with 300,000 joining after the logo change drama began. These loyal members account for over 35% of their track sales, which is a powerful base. They're also working hard on operational efficiency. They've improved kitchen processes, reduced waste, and seen a big win with a 19 percentage point improvement in hourly worker turnover. That means their teams are happier and more stable. The company's financial foundation looks strong too. They recently issued about $345 million in new convertible notes, which helped pay down existing debt. They ended the quarter with about $40 million in cash and total available funds of about $556 million, giving them plenty of flexibility. And in a move to reward shareholders, the board approved a new $100 million stock buyback program and declared a quarterly dividend of 25 cents per share. So, what about the stock? After the earnings report, shares initially fell by about 7 to 10%, trading around $45 to $49. This was on top of an earlier drop of about 15% when the logo change was first announced. The company's stock price is about 19 times its earnings. Wall Street analysts generally have a hold rating on the stock. Their average target price is about $55. Some models even suggest the stock could have a potential upside of about 44 to 49% from its current price, based on a fair value assessment. In summary, Cracker Barrel is definitely facing some headwinds with expected declines in customer traffic and future profits, especially after the brand refresh misstep. But they are showing resilience in their core restaurant business, and management is actively listening to their guests and focusing on improving the food and overall experience. They've got a strong balance sheet and are committed to their heritage, which is what so many Americans love about the brand. It's clear Cracker Barrel is fighting to get back on track, and they're counting on those classic comforts and strong customer connections to lead the way. That's all for today. If you found this breakdown helpful, please remember to like this video, subscribe to the channel for more financial insights, and hit that bell icon so you don't miss our next update. Thanks for watching, and I'll see you next time.